Well, staying with this, let's go to our reporter, Will Hollis. He's in Hull this morning, joined by a mortgage broker. Good morning to you, Will.
Good morning. Yes, we're still a few hours out from that Bank of England announcement, but the day has started here in Hull at UK Moneyman. Of course, we're talking about mortgages. It's been in the news all week. We can't get inflation and interest rates out of the news. And this is the kind of place where people will be calling to find out what is going to happen to their mortgages. And the person on the end of the phone here today. Sorry, just remind me of your name and what you're doing here at UK Moneyman.
Joe, I'm one of the case managers.
Joe, just stand up for me so we can get you on the camera. Joe, what are you expecting to hear from people today when they're making the call?
They're going to be really nervous. The base rate's going up and people are worried that the mortgages that they've got are going to go up, in the payments are going to go up, or that they've not secured the right rate and the mortgage payments are going to go up on that one.
Bank of England are announcing this at midday. What's it going to be like until then? And then when we get that announcement, what's it going to be like here at UK Moneyman?
The phones will ring a lot more after lunchtime. As soon as it goes on the news, people just get nervous and they want to check in with us and make sure that they've either made the right decision or they've not made any decision and they need to do something as soon as they can.
What is it they're really nervous about? Is it about suddenly having hundreds of pounds extra to pay every single month, thousands of pounds extra a year, which we know could quite easily happen?
Yeah, exactly that. People are worried that they just can't pay the mortgage that they've got sometimes, let alone the new house that they want or need to move to. So they're really worried.
Joe, I know you've got a busy day, so we'll let you carry on. But the man behind the business here at UK Moneyman here in Hull is Malcolm Davidson. Malcolm, you started this business in 2009. Is this the busiest you've ever been?
Yeah, there's a lot of anxiety out there for people. You know, we had this disastrous mini-budget at the end of 2022 when mortgage rates spiked up, then some confidence returned to the market at the beginning of 2023. We've had a great start to the year. Mortgage rates have been coming down. So those rates at sort of 6.5% we saw at the end of last year came down. In fact, we got rates down as low as 3.99 quite recently. But of course, this inflation is proving really stubborn and mortgage rates are going up, banks are reacting, and we seem to be back to where we started at the end of, the end of sort of 2022. And people are worried about how much their mortgage is going to be costing later this year.
We think it's going to go up by 1/4 percentage point. It could even go up by 0.5%. From a mortgage broker's perspective, is that the right thing to be doing to bring down inflation, or is it causing you and your customers problems?
Well, we're just here at the end of the phone to speak to customers to try and make this bad and to make sure that they're on the cheapest deal, not just now, but all the way through the mortgage. We have customers that come back to us year after year to ensure that they're on the cheapest possible deal. In terms of it being the right thing to do, well, this is the only tool that seems to be employed to put interest rates up, to take money out of the economy, to get this inflation down. But it's not working at the moment. The 10%'s gone down to 8% and nowhere near this 3% target, and people will be feeling the squeeze. The mortgage payments are going up on top of everything else that's going up as well.
Malcolm, don't go anywhere. We're sticking around as well because it is going to be a busy day here at this mortgage broker's in Hull, as well as every single mortgage broker around the country. Eamonn and Isabel.
Good stuff, Will. Thanks very much indeed.
Good morning. Yes, we're here in Hull at UK Moneyman, a mortgage broker, and you can see all around. Lots of people working, lots of people checking their emails as well as checking the mortgages, because the M word is the big word for the day. We're of course talking about, of course, interest rates, and we've been talking about inflation yesterday, but lots of people have got their eyes set on 12 o'clock because that is when the Bank of England will announce how much they're going to be raising interest rates by. We've got Malcolm Davidson here, who is from UK Moneyman. You're the managing director. As we inch closer to 12 o'clock, how is the atmosphere here, and how is the atmosphere going to be for the people who are looking at mortgages and maybe their contracts ending?
Yeah, well, I guess the tension is rising a little bit. If you've got your mortgage coming to an end in the next 6 months, you're going to be looking out for the announcement today. We were hoping that it might be a 0.25% rise. There's rumour that it might be a little bit higher than that, giving people added anxiety about what's going to happen if their mortgage deal is coming to its end.
And what are the advice that your mortgage brokers are going to be giving? Because everybody will have a different mortgage, everybody will have a different salary, but what's the general idea that people will be hearing from your team and other mortgage brokers around the country?
Well, if you're in a fixed rate mortgage, there's no need to panic because your deal, if it isn't coming to an end in the next 6 months, you're okay, you're insulated against today's news. But if your deal is coming to an end before Christmas, then most people are taking action now, getting themselves locked into a new fixed rate. It's difficult to know whether to fix for 2 years or 5 years. 2 years gives the opportunity to refinance again in 2 years' time when the situation may be better. But if they're more risk averse, people are still fixing in for those longer periods of time to give themselves that longer peace of mind of knowing that at least their payment is going to be a set amount if things continue to get worse.
It's going to be a busy day here. We're still looking towards that 12 o'clock time. Malcolm's not going anywhere, and neither is any of his staff, but still a little bit away from when the Bank of England announced that interest rate decision.
Let's head over to Hull now to join Will Hollis, who's with a mortgage brokers there. And I suspect that phone might be ringing off the hook pretty soon, Will. But interesting that the bank in its deliberations referring to this fact that the full impact of the rate rise not being felt for some time because of fixed rate mortgages. And this is part of the problem, isn't it? A lot of these 2-year, and as Liam was saying, even 5-year deals coming to an end and people suddenly being hit with this huge amount they're going to have to start paying for their mortgages.
Yes, well, Mark, something quite incredible happened here at UK Moneyman in Hull. As soon as we got that 0.5% rise, everybody stopped talking and they started focusing, and the speed at which people were tapping on their mouses and their keyboards turned to double, because everybody was suddenly realising that they had to try and get those deals for all of the people that want to come to mortgage brokers like this one to get a better deal as those percentage rises come in. And one of the people that's responsible for making things happen is Paula. Paula, you're a compliance manager, so you make sure that the rules are followed. But what about all these people that are going to be answering the phones and figuring out what to do now that we've got that percentage rise?
Well, their job is to actually get the cases into the lender and help secure these deals for these customers, because the lenders can pull the deals at quite short notice. So we'll be keeping an eye on what the lenders are doing this afternoon as well.
And what's the atmosphere like in a place like this on a day like today? Because I imagine not every day is as stressful as an interest rate rise day.
No, it is stressful. Like I say, there's a lot more calls, a lot more emails coming in, but we're here to do that job and to help them clients.
And then what kind of problems do you think people will be coming in for? Is it ultimately that worry about how much money they're going to have to pay more on deals that are ending?
Yeah, definitely. Those that are coming up to an end date, they're the ones that I suppose are panicking a little bit at the moment. But also there are customers that are on the variable rates or on tracker deals, seeing Bank of England rate going up. They're all affected as well.
And then that 0.5 percentage point, how much of a surprise is that for you and for your team here? Did you kind of expect that it could go that high when we saw the inflation was still running high yesterday?
I think so. Yeah, we knew it was like 0.25% to 0.5%, so it's gone to that 0.5%, which is going to be a struggle for some customers on them tracker deals. But yeah, we'll do what we can here to help them.
And everybody's going to be focused and everybody's going to be working really hard, Mark, because, of course, this is people's money and this is people's lives. We're here at UK Moneyman in Hull and lots of people are going to be working around the place. But what's going to happen now is lots of phones are going to start ringing. You said at the start, all the phones are going to be ringing. We're not going to hear those because it's not like in the movies, everybody's got headsets. So they're only going to hear it ringing themselves. But I suggest if you come back to us in the next half an hour or so, you're going to hear lots of mortgage brokers giving advice to actually quite worried people.
Well, let's head over to Hull now, because Will Hollis is waiting for us at a mortgage brokers there. And Will, we've had this term being used, mortgage time bomb, of course, because of the number of people on these fixed rate deals that are going to be coming to an end now, faced with a huge rise in their monthly outgoings.
Yes, good afternoon, Mark. I've just lost my communications, actually. But here in Hull, you can see that people are working really hard and they're trying to get those mortgage deals because, as you say, a time bomb is one phrase that's being used. A catastrophe is the other phrase. But it seems that everybody's working really hard and trying to make sure that any of those deals that are about to be withdrawn are got as quickly for people that are trying to get a mortgage. Somebody who's experienced this for many years, for 4 decades, in fact, and you're celebrating your 40th anniversary working in mortgages is Wayne Dewsbury. Wayne, how does this compare to the rest of your career, 40 years?
I think it's probably quite a chaotic time, but we've seen those before. You know, 92 with withdrawal from the European rate mechanism. Obviously, we've been through a credit crunch in the past. We've seen recessions and we've seen booms. So the market generally is pretty resilient. It tends to find its way forward, you know.
And what kind of phone calls will these people be taking, and the phone calls that you're taking as a mortgage advisor today?
Obviously, you do get people who are coming to the end of the deal. That's a big one at the moment, coming to the end of an existing deal. And obviously, we're coming out of a period where we've had record low interest rates for a long period of time. I look at these interest rates and think, well, I remember when rates were 15.4%, so they still seem quite reasonable in a historical context. But if you're coming out of a 2% fixed rate, then clearly jumping to 5 and 6, and possibly who knows where they're going next, is clearly going to be a shock to the system. So that's the sort of call that we're getting quite a lot of.
I imagine a lot of people will be reflecting on how it has been before, but how it is right now is understandably quite worrying for people that could be paying hundreds of pounds extra because of that half a percentage point. What's the advice that UK Moneyman will be giving to those people that are calling really worried about how much they're going to have to pay?
I think the first thing is don't bury your head in the sand. That's the first piece of advice. Lenders don't want you to struggle. It's not in their interests to have things like repossessions, having to go to court to take possession of the property. So don't bury your head. Talk to your lender if you feel that you are struggling. If you're coming to the end of a deal, obviously talk to a broker like ourselves, in the sense that we can tell you what the options are, and more importantly, guide you through what might be the better option for you. So talk to somebody. Don't bury your head in the sand.
Bring more reaction from across the country and head back now to Hull to join our correspondent Will Hollis, who's there at a mortgage brokers, and also Jack Carson, who is in Birmingham to reflect on manufacturing industry, of course. But Will, first to you, has that mortgage time bomb exploded there in Hull?
Yes, well, it's been really busy here at UK Moneyman. A lot of the mortgage advisors have been speaking on the phone. They've been going through the websites and speaking to different banks. I think the way that we talk about a time bomb in the news today is because there's a real risk that a lot of the mortgages are going to be withdrawn. So advisors are trying to secure those deals for their customers. But where we are now, this is the marketing side of the business. You can probably see people editing videos, stuff for social media, because of course now marketing your business, because this is a competitive market, you want people to come and get your mortgages with you rather than the competitors, is a lot of it online now. And Malcolm, you've been speaking to us today, the managing director of UK Moneyman. You're in front of a green screen, not for us, but because you were doing a few videos for people online. Is that a part of where the business is now, and what are you experiencing today online? Because you're probably not just getting phone calls from people that are worried about what's going on.
Yeah, well, it is an anxious time for people, and they reach out to all sorts of different places for advice now. So it's normal to reach out to family members and friends and people been through the same experience. But one of the things people do is go online, go through the social media channels as well. And we want to cut through some of the jargon. Obviously, it's an anxious time, and we want to try and allay some of those fears and educate people in terms that they understand, make it relatable as to what's actually happening out there and what they can be doing to improve their situation.
It's been very noisy from people talking in your advisory office. Is it noisy online as well? Are people tweeting about this or writing about it on Facebook? Or do you think we'll see that when people come home from work and over the next few days?
Yeah, I mean, there's obviously, when we're on the news, it means probably something quite big is happening. And of course, we weren't expecting that 0.5% rise today. We were hoping all week it was going to be 0.25. Sadly, yesterday, inflation figures were much higher than we anticipated. And yeah, there's a lot of noise today, and people reaching out to us whose deals are about to end to make sure that on the best available deal, so they're not paying back a penny more in interest to the banks than they actually need to.
When you're talking to people, whether it is online or on the phone, what conversations are you having today because of that 0.5% rise? Is it mainly the conversations around the amount of money people are going to be paying when their contracts end?
Yeah, that's it, because a lot of our borrowers, if you were first-time buyer in the last decade or so, you've never experienced interest rates going up even by 0.1%, whereas this time it seems like such a sudden shock this last year where interest rates have really spiked up. So it's not just that they're going up, but it's for the first time, and of course these increases are significant on top of everything else that also seems to be increasing costs on a weekly and monthly basis.
And what happens next for those people that have, thinking they're going to have to spend a little bit more money? What's the process now for mortgage brokers like you and around the country in offices like this one?
Yeah, well, the government have been pretty clear there's going to be no assistance, there's going to be no furlough scheme for mortgages. So consumers are, to some extent, out there on their own, and that's where we come in. Obviously, we don't invent the product, we can only get the available products that are out there. We want to give these people the advice at the right times to ensure that they're on the cheapest deals that we can actually secure for them.
Malcolm, a busy day for the phones, but also for the things that you need to do online. And even though some people are at work, I imagine over the next couple of days, there's going to be lots of conversation in places like this about what to do about their mortgages.
Now, Will's at a mortgage broker's in Hull, OK? So this is right at the coalface of at least talking to people anyway about the dire straits that they are now in. Will, what's going on where you are?
Yeah, good afternoon, Patrick. Well, just to give you an idea, when it was 12 o'clock a couple of hours ago, when that information came in that it was going to be half a percentage point, everybody stopped talking and they suddenly started working in a way that I hadn't seen them for the rest of the day. We've been here since the morning and we've been talking particularly about how mortgage rates are going to be really affected by that 0.5% and what it's going to mean when it's up to 5%. We've been talking particularly about fixed term contracts and when those contracts end, what might happen next. But it's not just about people that are getting on their mortgages, first-time buyers or people that are coming to the end of their contracts. A lot of people that might want a mortgage might be a little bit older and they might need later life advice, which is what Dan does. Dan, just describe for me, what's these high interest rates? What are they going to mean for particularly older people that are maybe in the 55 plus bracket?
I think you've really got two main thrusts for clients who are over 55. One is that there are a lot of people who are still stuck with an interest-only mortgage that they maybe took out 20 years ago, and that endowments have failed and they haven't been able to repay. A lot of these people are stuck on variable rates, which of course are increasing each time the Bank of England base rate goes up. A lot of people are on fixed incomes and they're finding it really, really hard to cope with the higher mortgage payments. So we're looking at solutions for those people to take on mortgages into retirement, or maybe even looking at equity release as a way to pay off those mortgages.
This has been in the news all week, but today, what kind of calls are you getting at UK Moneyman from people where they're a little bit concerned about their interest-only mortgages?
There's an awful lot of people who are concerned about what the impact of this is going to be on the mortgage that they've got already, and they're also wanting to know what the solutions are to move forward from that.
And what kind of things are you hearing, and what kind of advice are you giving them?
Well, in a lot of cases, there's a solution where we can transfer them onto a retirement interest-only mortgage, or we can look at an equity release mortgage as well, which is has a fixed interest rate for life, which means that people have, don't have this concern in the future.
It's clearly a busy day, even if it's a little bit quieter down here in this part of the office. There's a full office upstairs, isn't there, Dan, where lots of people have been taking phone calls and checking all the different mortgages, because I think the real worry is that the banks are going to start withdrawing mortgages, and so people are trying to fix those rates in while they can, Patrick.
Yeah, Will, thank you, and thank you for everybody there as well. And I think that's a fascinating angle on this, because all too often it's, and I can understand why, it's young people who can't get on the property ladder. Yeah, but what about all of those people who, many people go, oh, you had it so good for years. Well, all right, maybe people did have it quite good for years, but they certainly haven't now. When you are a bit later in life as well, with absolute respect, there might be a bit less you can do about it. Someone my age, fingers crossed, have got years to mitigate any kind of economic disaster that I've got now. Less so if you're in your 60s. Will, thank you very much. Will Hollis there.